Good day and welcome to revision number 3. This one's about recognising balance day adjustments. On the right hand side, I've got all the balance day adjustments. Press pause so you can sort of work them out yourself, and then we'll go through. The first one is income owing including GST. Because it's including GST, it's going to be accounts. So that's going to be accounts what? Receivable. Good. Second one, expenses owing including GST. Again, accounts, not accounts receivable, but accounts. Very good. Good one because it's an expense owing without GST. Without means accrued, so there's going to be called accrued. Nice. Next one is income owing without GST. Without GST again accrued, so there's going to be called accrued income. Good. Expenses paid in advance. There's prepayment. Income received for work not yet completed. So we've received the income, current liability because we haven't done it yet. We owe them the service. That's income in advance, current liability. Unsold inventory at the end of the year. It's closing inventory. We're going to put that on the debit side as a current asset and on the credit side as a negative COGS. Depreciation, you knew that one, writing off the value of the property, plant, equipment. This is as it ages, its value becomes lower. So we write that off plus the depreciation plus accumulated. And the last one, split expense. So expense used for two different expense types. So we might split, for example, insurance, part of that being a distribution cost and part of that being a administration cost. Brilliant. Try the Kahoot. Just recognising today using the previous exam papers.